One of the many reasons people don't jump into self-employment is the fear of not having health insurance. So what are some ways that you can save on medical expenses and health insurance if you're self-employed? Hi there, as always, welcome to our channel. If you have any questions, you can reach us in the comments below or at the number on the screen. There's of course no charge for our services and we are licensed nationwide. So today we're going to be talking about some health insurance options and how to save money on medical expenses if you are self-employed. Make sure to stay tuned to the end of the videos for some bonus tips. So let's start with S.H.O.P. S.H.O.P stands for the Small Business Health Options Program. And if you employ less than 50 full-time employees, this may be an option for you. Now, of course, if you have more than 50 full-time employees, then under the ACA, you are required to provide health insurance. However, if you're a small business owner with less than 50 full-time employees, you may want to do so anyway. A recent study indicated that 56% of U.S. adults with employer-sponsored health benefits said that whether or not they liked their health coverage is a key factor in deciding to stay at their current job. And 46% said health insurance was the deciding factor, or at least a positive influence in deciding their current job. So if you wish to attract top talent, even if you're not legally required to provide health insurance, you may wish to do so anyway. Now there can be different criteria for different states, but if you check at healthcare.gov, it will point you in the right direction. Now to be eligible for S.H.O.P, you must have between 1 and 50 full-time employees, and at least one of the employees cannot be an owner or the owner's spouse in order to qualify. Additionally, at least 70% of those offered the program must elect to enroll. Now, if you're the sole employee of your company or you're not in a financial position to offer health insurance to your employees, then you may want to consider a regular marketplace plan. Marketplace plans must offer at least the 10 essential benefits, and of course you cannot be denied or charged more based on a pre-existing condition. This is a list of the 10 essential benefits offered by marketplace plans. This list can be found on healthcare.gov, and it includes ambulatory patient services, emergency services, hospitalization, pregnancy, maternity, and newborn care, mental health and substance use disorders, as well as prescription drugs, rehabilitative and habilitative services, as well as devices, laboratory services, so any tests that you need done, preventative wellness services, so any of your doctor's visits, as well as chronic disease management, and pediatric services as well. And remember that all plans must offer birth control coverage and breastfeeding coverage as well. These additional benefits, things like dental, vision, or medical management, can be purchased separately. Now, your monthly premium is largely determined by your eligibility for a premium tax credit, in addition, of course, to the plan that you choose. Your eligibility is determined by your income and your household size. And if you are eligible for a premium tax credit, it can save you quite literally thousands and thousands of dollars per year. Healthcare.gov will determine your eligibility by asking you a few simple questions. On healthcare.gov, you'll first be prompted to put in your zip code because the availability and price of plans is largely determined by, of course, where you live. And then you'll answer some brief questions about your household. So let's put that it's us and other people. We will put that we are married and that we will claim dependents. Let's say 2 dependents. And let's say we are a 45-year-old male who is a legal parent or guardian of a child under 19. We did put that we have 2 dependents. And for our spouse, let's say a 46-year-old female who is also a legal parent. Now we'll put our dependents. Let's say we have a 14-year-old male and a 12-year-old female. Now let's put in our income. Let's say this family has an income of $80,000. Well, then the estimate is that this particular family would be eligible for a premium tax credit of $1,374 per month. With a higher income, this hypothetical family might not be eligible. With a lower income, they might be eligible for a larger premium tax credit, or they might be redirected towards Medicaid or CHIP. Now the problem is, it may be very difficult to estimate your income for the upcoming year if you're self-employed, especially if you're in the beginning stages of your career. Now, if you overestimate, actually it's not going to be such a big problem. You'll likely receive a larger refund when you file your taxes. However, if you underestimate, you may have to pay a portion or even the entirety of that premium tax credit back when you file your taxes. Definitely not a welcome surprise. This is why we highly recommend working with an experienced tax professional. If you're looking to lower your MAGI or modified adjusted gross income to perhaps become eligible for those premium tax credits, then you may want to consider enrolling in a high deductible health plan which offers an HSA or an HDHP with a health savings account. HSAs are health savings accounts, and the amount that you contribute is pre-tax. So that not only lowers your taxable income to help you when you file your taxes, but it may also lower your taxable income or your MAGI specifically to the point where you now become eligible for a premium tax credit, which, as I've stated, can save you thousands of dollars per year. If that's not the case and you're not on the cusp, there are other options, and we will talk about that later in the video as well. But back to HSAs. So as I said, the amount is pre-tax. Additionally, the accounts are interest-bearing, and that interest accrued is also not taxed. And as long as you use the money for a qualified medical expense, and yes, the list is extremely long, it even includes things like chiropractic care or Advil, then that money will not be taxed. There's no penalty or anything like that. Even if you don't choose to use it that year, you can simply let it sit there and continue to accrue interest, and the money will still be there the next year. It is still yours to use. You can even invest a certain portion of it. And if you manage to hold on to that account until you retire, then you can convert it to a basic retirement account. Now, if you've worked with an accountant, you've tried an HSA, and you're still ineligible for a premium tax credit, then a marketplace plan may be rather expensive, especially considering there are some downfalls. For example, it's very, very hard to find a PPO plan on the marketplace, which will provide you more flexibility. So if you are someone who's ineligible for a premium tax credit, you may want to take a look at a short-term medical plan. Short-term medical plans are a type of private insurance. Generally speaking, they are available for a period of up to 3 years in most states. However, they're not for all people. So although short-term medical plans do offer lower monthly premiums, and you can have access to a plan with nationwide PPO coverage, there is medical underwriting, which means if you have a pre-existing condition, you could be charged more. It may not be covered at all, but certainly not in the very first year. And also, there are no 10 essential benefits, so things like pregnancy would not be covered. If you're looking to save money on medical expenses or health insurance, then there are some alternatives as well. For example, you could look into a catastrophic coverage plan, which will really just provide you with a bare bones plan there to protect you from major medical expenses should you have major medical bills. You could also enroll in a hospital indemnity plan, which will pay out a lump sum if you're hospitalized, a critical illness plan, which will pay out a lump sum if you're hospitalized, or even something like a direct primary care agreement, which is not really health insurance, but will at least provide you access to your physician on a regular basis. Of course, we don't recommend that you go without insurance, but if it's simply not an option, at the very least, make sure to check out the Healthcare Blue Book so that way you can compare and contrast different prices for different procedures and services in your area. As always, if you have any questions, you can reach us in the comments below or at the number on the screen. As I said earlier, there is absolutely no charge for our services. And please let us know if you found any successful options for health insurance or ways to lower your medical expenses as someone who is self-employed. As always, thank you so much for watching and have a wonderful day. Bye-bye. Wait, before you go, please make sure to like this video. Also, make sure to subscribe to stay up to date. And if you're self-employed and want to retire early, check out this video to learn more. We'll see you next time.